Hey everybody, it's Mark Dolfini, Landlord Coach. I want to talk to you guys very quickly about some assets that you may not even realize that you have that you could definitely use to make yourself a desirable borrower. Now, what am I talking about? I know a lot of people out there, especially beginning investors, are always struggling with how to get in their first deal. Or how to scale, right? Maybe you've got a number of mortgages already out there, and you're not really sure how best to keep things moving forward, right? Well, I was sitting here on my porch, and it's the rain is coming on and off, but I'm enjoying the coolness outside as I'm sitting out here, and I was thinking about it. Something that people often don't think about as being an asset, even though it really doesn't necessarily belong on the balance sheet because it's not really a face value, is life insurance. Now, I'm talking specifically about term insurance, and you're thinking, well, how could that possibly be used in your favor as a negotiating tactic? Well, not too long ago, about maybe 3 or 4 months ago, I was negotiating about a $250,000 deal. It was about $240,000 altogether with two different properties, and this was going to be a seller finance deal. So we were kind of going back and forth, and they were just hemming and hawing about doing the seller financing. They wanted it, but they wanted higher payments. They didn't really have for whatever reason, they said they just didn't feel super comfortable with it because they didn't really know me that well, even though we've had a relationship for maybe a year or so, but they didn't really know me that well. So I offered them this. I said, well, how about this? How about I offer you an assignment of life insurance which would pay the full balance of the mortgage, of the note, basically, if something should happen to me. And they said that you would be willing to do that? I said, yeah, absolutely. And that was what did it. They saw that as me basically wiping out all the risk. Now, of course, that seems to put a price on my head, but these are ethical people that I'm dealing with. But I don't. But they were really worried that even though they may not have said it, they were a little bit worried that if something did happen to me, how's this mortgage going to get worked out? I mean, it could be 3 or 4 months that things go to the estate and all that other crap that get their probate or whatever that goes on, right? I don't know. I'm not in that realm right now, but I have to make sure that I'm taking care of them, that the payments are still going to continue on to them. If not, if something, God forbid, should happen to me while I went into this deal. Now, the thing was, it was a 0% financing deal. So just straight payments, just straight amortization. There's just basically going to be building equity very, very fast. So it was a great deal for me. Not a bad deal for them because they were getting asking price for their property, and I was able to get into it with no money down. So all that said, what the real deal was I was able to mitigate their risk by offering an assignment of a term policy that I already have well in excess of the property's value. So I called the insurer and said, hey, can you carve out $240,000 for to assign to be paid in the event of my death until until at such time that the property gets paid off. Now I would have to remember to remove that assignment if in the case afterwards, but again, that's just something you should do on an annual review anyway when you're looking at your policies. But that's a way that you can bring something of value to the table when you're constructing these seller finance deals, right? And you might be thinking, well, can I do that with a bank? Well, commercial lending, you generally have that as an option, but the residential mortgages, unless the banks are going to be holding it as a portfolio loan, meaning they're going to hold it in-house, generally that's not a bargaining chip that would play because they're going to package that up and they're going to sell it off for another institution to buy or sell the property. They're not going to care about whether you have life insurance or not because they can't really attach it to that. But a commercial loan or an in-house loan that they're going to manage locally, yeah, that absolutely would make a difference. So that's why it's important when you're talking to, if you are going a traditional banking route or you're working with a seller financing. I mean, I wouldn't necessarily lead with that, but it definitely is it is something that you can use as a significant bargaining chip in the negotiating process. Probably something I would hold on to near the end and use that as just kind of a final push to get it over. I wouldn't make it one of your main selling agreements or main selling parts until the very end. But again, just another tool in your toolbox. All right. Have a great rest of your day, guys. Remember, you can like me on Facebook. And be sure that if you've got, oh, here comes the rain, signing off just in time. But remember, if you're not placing a value on your free time, someone else is, and there is no amount of money that makes time irrelevant. Have a great rest of your day. We'll see you.